The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman. Tiger Technicians out. Dow's down 51. S&P's up 2.5. We'll go through the numbers right now because I think this is the beginning of the week. Let's go through the technical picture. And thank you, Steve, for 2 great hours. Very important. We kick off here at 9 o'clock here at TFNN. We have programming all the way through the day. And straight after my show, you've got Larry Pesavento, then you've got Daryl Martin, you've got Dave White, you've got Tom O'Brien. 4 o'clock till 6 wraps it up. But just a fabulous day. I mean, what can you ask for here at TFNN? We just try to give you our technical analysis as we see things. Dow is down 57, so that means it's underneath this trend line that was really important. It's got to hold this trend line. It's got to work its way. It did it early this morning. It went to 16,520. That was very good. But not good enough because it needs to clear 16,562.32, the high of the 7th. The moment it does that, 16,588 becomes the target. That's number one. Number two is the technique I discussed on Friday just very briefly. I spent some time with my subscribers saying that the Chapman wave, the technique that I call the trend gauge, basically what it does is it takes Richard Arm's already made up trend index volatility. The trend index, short-term trading index. It's called that, or the Arms index by Richard Arms. And I use certain numbers, certain areas that tell me with a fantastic consistency what I would be looking for either the very next day, if it is below a certain number, or if it is above a certain number, what I'd be looking for within 2 days. And then what it would be looking for in 2 days, in this particular case with the signal from Thursday, is that a very strong move up in the futures pre-market, taken over by the indexes. Usually it's all the indexes. It can be a single one. And you have within 2 days for this to work. Well, this is really interesting because you got that exact phenomenon happening on Friday, which made it partially successful in that the Dow did move and close quite a bit higher. But the S&P kind of failed. And today, the S&P is a little stronger than the Dow, but they are both failing. But earlier on, you got that move to the upside. Now, what I forgot I can't believe it. I was so busy with charts. I sent out so many charts. I sent out so many long-term charts, what I'm looking for, why I'm looking for these different things. And what was very important to me is that on Friday, I meant to mention it, and then I forgot again today, is that this indicator is really an intraday indicator, and what it does, it's like a trigger, it's like an accelerator, like a turbocharge. It has a limited time, so that it's a kickoff. And then what happens is you need other indexes, etc., to take over, because it can fail once it's completed its objective. That's kind of what we're looking at now. Now the Dow's down suddenly 110, 113. The S&P's down 2.57. Now that to me is very interesting, because there are some stocks in the Dow. Let me see if I can just find it right here. So the Dow, the weakest stocks are... let me move over here. So you've got Goldman Sachs, which has not been looking very good, down 3.61. Oh, man. I had that as a short the other day, did nothing about it. IBM for the first time is down. It's down 2.84. You've got Travelers down 2.16. You got Johnson & Johnson down 2.25. Even Verizon is down $1.21. So you've got a lot of weight to the downside. Caterpillar down $1.74. Home Depot has been acting very poorly. So have many of the home builders over the last 2 days or so. So I'm looking at this and I'm saying to myself, okay, we're getting signals all the way around here that said that maybe we will not make 16,589 for leg D to the upside. It's all I really wanted. Most importantly is looking at the Dow itself. You've got your peak D in place in the weekly. You've got a potential leg D that might be going to a peak D in the monthly because we've not gone above December's high. So all of this says be very careful, and one of the reasons why I said to subscribers we were going to go slowly into our looking at long positions now because we want to start looking more at the shorts is that there are many signals, many signs that are indicating that although there's a rotational market going on at this particular time. Look at your Alcoas. Look at some of the number of the steel stocks. A number of the aluminum stocks. Not so much the steel. Steel, in fact, has been getting clobbered. But look at that rotation into some of the few remaining IBB stocks that are acting quite well. And all of a sudden, what you've got is a situation that there are fewer and fewer and fewer stocks that are moving to the upside to new all-time highs. To me, that is very important. Now let's just go on, and we've got, let me go on, it's much better that way. So the key support right now, this week, is going to be 16,240 was the low of the 13th of January. Remember, that was that 170-point down day. I'm not going to take that. I'm going to say that a close below 16,220 to 200, that's support level. So close into the 16,190s would be very negative, and that would confirm for me that the daily is back in the sell mode, that it is not going to be able to break to a new all-time high. It's having a terrible time doing that. Too many Dow stocks are now starting to roll over. And when you look at the weekly chart, that candle from last week, that low that I just mentioned, 16,240, that's going to be very important. Why? Because if it takes it out, it also takes out the 9-period exponential moving average, which it has only closed under. Actually, it's only touched, let alone closed under, once. And that was the week of the 13th of December at low of 15,703. Since it broke out back in October, the week of the 11th. So now let's go on with the S&P. SPX.X. S&P has made a peak D at 1850.84. That's in a brand new buy mode, and I am counting. It's a little unconventional. I don't like to have these unconventional things, but boy, the more I studied it, that high, the single leg up from the low on the 18th of December at 17,067.99, stopping at 1811.08, and the next day the high was 1810.88. That 80-cent difference, let me just double check. 1811.08, 1810. It was. Yeah, that's right, it was. It was a peak, but not an official peak because the low bar cannot be the high bar. So what I did is, in my own work, I'm going to change the color so you can always see when I do this because it's very unusual. And I'll make it a red. There you are. That red A is a false. Our phantom peak. So if you do that, you do get to the D right there in the S&P at 1850.84. I want things to line up. I don't like to change them just arbitrarily. There's always a specific reason for it. I could call this C. I could even call this now C1, C2. The MACD and stochastic are very poor. That means that spike was like a rogue wave spike to the upside on the 15th, going to 1850.84 in the S&P. More importantly, we've got a peak. We've got a peek in the weekly at G/C if there's no new high bar this week. Going to watch that really closely. So all in all, let me just sum it up. The Dow and the S&P are really close to some kind of reversal. I thought there was enough residual strength to sustain a move, but that Chapman wave trend gauge indicator, I should have said the entire sentence, which is that within 2 days there should be a very powerful move that starts in the S&P futures and then carries over to the indices during the session, in the cash. That's what I said, but I did not complete that sentence, which is what I normally do. I don't know why I didn't. I was just so busy with other stuff. It just slipped my mind that it could be just an intraday pop, and that's why holding into the intraday high, early intraday highs this morning was so important for the Dow. Now let's just continue. Let me just quickly move over here so I don't miss anything. There you are. Today's Tuesday, of course. Today, Tuesday, Andy Hecht at 3 p.m. And Tuesday means that we have the options hour. We do not have it, Larry Pesavento. Thank you to my engineer for reminding me about that. Today's Tuesday. Yesterday was Monday. Should have known that. Martin Luther King Day. Let's go to the Qs. 1, 2, 3. 1, 2, 3. Now, the Qs have made a peak F/A going to a... this is getting so complicated. I don't like this. So I'm going to start something else. I'm going to do this right now. I'm going to give you parameters to watch. Today's high in the QQQ Trust Series is 88.59. I'm going to type that in because it's slightly higher. 88.59. It's in leg G/C in the weekly, E in the monthly, and it's holding well. It's right now up 0.07. S&P is still acting quite well, only down 3.7. Dow went all the way to 130. Now it's minus 116. Now, if I go to an F in the daily chart of the Qs, this one was, I have to admit that once in a while I do get a Chapman wave methodology, a wave count technique that just... it's a little tricky. Why? Because that peak F at 86.18, I called F/C, had the MACD and stochastic pullback dramatically immediately after that with that big candle that went all the way down to 84.05. And then you started to move. And I'm suspecting that I've got to consider that that was the top. Remember, your objective in the Chapman wave, every once in a while, it's not as clear as you'd like it. Well, I've got a technique that tries to give you every single nuance in the market. That's very difficult to do. So sometimes you have to have a re-notation. That re-notation, that was the 18th bar. That re-notation with the low of the 18th of December, 84.05 goes to peak A. At 87.90 on the 27th of December, pulls back. It goes to B at 88.54 on the 15th, and today it gives you ABC. Today it gives you D. I like that. I'm comfortable with that. It's matching everything else. So this is a leg D to the upside in the Qs, and you've got a MACD which might deflect lower. Stochastic strong at 87. I'll be right back. Basil Chapman, call in 877-927-6648. Dow is down 115. S&P's 3 3/4.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, and we've got a caller, Greg in Portland, Oregon. Hi, Greg. How are you?
I'm doing pretty good, Basil. How about you?
Very well, thank you. You'd like to look at...
Yeah, PPLT, which is the platinum.
All right, so I'm looking at ETF's physical platinum shares. Now, I've not ever tracked this in great detail. I know that once in a while I've looked at it, but it just keeps slipping my mind. There's another platinum. I used something else, but let me just do this quickly. So that's... So that's A, B, C, D. Good. So let me just finish up these.
I was looking at a D in the daily and probably leg A in the weekly and possibly monthly. I don't think the stochastics and MACD on the monthly haven't turned quite yet. I mean,
so you know what I'm going to do, folks? We're looking at PPLT, which is the ETF. Physical platinum shares trading at 141.44. I just wanted to see two things here. One was the volume. Ooh, not very much volume. That's okay. You know, I don't have all that much of a problem trading how can I put it? The ETFs that represents a particular category or a group, a sector, for two reasons. One is, even though it's light volume, it's not going to, most of the time, it won't stray very far from where the group is going. That's number one. And number two, in a sense, it's a little bit like an index, and that because it's a composite of other things, the volume, it's not as if it's a particular stock that suddenly there's bad news and it just drops and you can't get out or it spikes. This is very different. This is going to follow platinum. So in that regard, I feel it's a viable vehicle. That's really what I wanted to say. But more importantly, I wanted to go where I've done a lot of work is on the continuous contract of platinum. It's in leg E in the daily at 1447.50. It's, as you say, leg A with a failed B minus, so it's an inside bar. So this is so far a nice pattern because it's saying it's going from the bottom of a rectangle towards, there's a good chance that it's going to work its way towards the top. And the monthly chart is the one that really concerned me a while back until it started to stabilize and show that it doesn't necessarily need to go to the 1207 level, which is the 200 period exponential moving average in the monthly. The monthly went to a peak F top way back in 2008, in March of 2008, plunged down to the 200 period exponential moving average. The price has changed because it's being smoothed out, but let's say approximately 2,419 back in March of 2008 to approximately 942 in October 2008. And then what it did is it went peak ABCD, pulls back, and then has another inside ABCD to slightly higher high, and it goes to the 1954 area in August of 2011, pulls back and has at a very gentle move to the downside, hasn't garnered enough strength on the upside, but has held quite well in the monthly. So the monthly is saying at this particular point is trying to work its way above the 9 period and hold above the 9 period exponential moving average. And in the weekly chart, if the platinum can get to the 1490 area, it's at 1448. That'll say great, because over a period of 4 to 6 weeks, it could work its way towards the 1540 200 period exponential moving average. Now I'm a little bit concerned because, as you say, in the daily we got a D on your PLT, and on the daily in my continuous contract, MACD is very strong. Stochastics pulling back, but still at 86%. Now, how would you do that? Do you have any position at all?
Yes, I started a position at 129. And
wow, that's just off the low. Can you tell me why you got in at that particular level? Because it's perfect. It's just less than a point off the low of the 19th of December.
Yeah, when I was looking at the chart, I was looking at it hit that low, which I had as my plus sign at 128.
Aha.
And when it spiked up, I put a buy order in below that, and so as it did spike back down, and just briefly at the 129. Yeah.
Fabulous. So, okay, now I got a much better picture, and now I can talk to you about something completely different. That's great. Hold on, Greg. We've got a break coming up here, and once again, Dow's down 113. We're looking at Platinum PPLT. This is the ETF, and I'll discuss it a little further. Greg's got a great entry point. I'll be back with Greg and Warren.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and we're on with Greg in Portland, Oregon. We're looking at PPLT. Let me just put that back in, because during the break I'm always busy looking at many other charts. So here we are. Yeah, so I'm looking at this, and I'm saying to myself, you're calling me to ask about this stock when you're the one that got in within about a point of the exact low and sitting pretty as a bird. I have to compliment you, and I have to say to you, I don't think I even want to interfere with your thinking other than to tell you what I'm looking at, and that is you've hit a peak E if there's no new high today. You're right on the 200-period moving average in the daily. The black line that you see here is the 9-period exponential moving average, and it looks very good. It's at 139.71 for support. I would not be surprised if there's some kind of a digestive moment here, but 138 to 137.50 area should be tremendous support. 138.32 is the 9-period moving average support in the weekly chart. I'm going to suspect. So the real question for you is, you've got a core position. Are you thinking of adding a trading position?
I was, yes.
Okay.
And I was hoping that the weekly, well, I was going to try to trade it off of the weekly.
Okay.
And
that's good, because you've got a big picture outlook already. Good, yep.
Yeah, and that's it's one that I wanted to hold longer term anyways, and the difference between the weekly and the monthly was bothering me a little bit. So I wasn't sure if I'd take a half a position, half of what I have off, and see if I got that pullback on the weekly. So I just wasn't sure where I would go back in.
138, between 138.30 is the 9-period moving average. I would put in a buy between 138.60 and 137.70. And on the second position, I would make it a stop of about, just initially I'd have a stop of about a point. If you manage to get it down there and start to rally, I would raise a half of the new position, the stop, to have one part at whatever you enter in, 1 point below your entry point, and then have a trading stop on part of your position, and I'll explain why. If there is going to be a market pullback, and a more severe one, not just a 4% one, but a real market pullback, the old-fashioned kind that we haven't seen for a long time. And I don't mean the big one, the very big one. I mean the very big one will be before we start probably the wave 4 in the Elliott wave that takes us to the leg E and F in the monthly charts of the Dow and the S&P. But I'm looking at this as if we are looking at this rotational market having a pullback now. That's more than 4 or 5%. I'm going to be watching to see how both the metals, the platinum area, the aluminum area, how these different metals hold up. And I think we will get a real good feeling, but by Wednesday of this week, Wednesday afternoon, no, today's Tuesday, by Thursday afternoon to Friday morning, we'll have a really good sense of what's working and what's not working. So here's my thinking. Your desire right now is to be thinking in terms of taking something off. You had said a half a position. I'm going to make it a little... Don't stick with what I'm saying. I'm just throwing this out as what I would consider to be guidelines. I would put a stop at 141.36 right now. I'd put a stop, since you wanted to take half off, I'd put a stop at about 140... What was the low of the day? 140.38. I wouldn't give it a point. I'd put a stop at about 140.90, somewhere around there, on some part of the position. If it takes that out decisively, I would then take out another part of the position so that you're getting close to your half a position. Reason being, if there's a sudden spike above 142 round number high of yesterday, and that's very important, 142 round number, 142 round, I'm going to put it as a round number high for now. If it breaks above that, it's telling you that that 200-period moving average is going to be really important, round about 141.30. So it's telling you can wiggle around there, up and down for a little while. That's kind of what I'm thinking is going to happen. So I would not just grab a half of my position right now. I'd give it 50 cents, take off some of the position, but if it starts to rally and it breaks above 142, then a part of the half of a position that you would have taken off, say a quarter of your position, use a trading stop of about a point, and that will get taken out at some point, but it could be taken out 1 or even 2 points higher if this works out well, and then you've still got 3/4 of your position, and then we can look at it again in 2-3 days. I hope that helps you.
Sounds great. It does help a lot, Basil. I appreciate it.
And the reason why I'm saying that is that the MACD and stochastic in the weekly chart, hey, it's only two hours into the beginning of the week, but they're acting really well. I don't want you to be premature when you've got in such a beautiful way and you've got such a nice profit. You don't want to give back much of it, but I think this is a way of protecting it to a certain extent. Hope that helps you, Greg.
Sounds great. Thanks so much.
Thank you very much for calling. I always appreciate it. Let's go to Warren in Denver. Hi, Warren. How are you?
Hi, Basil. I'm looking at Visa as usual.
Yes.
I mean, it went up really big on Friday because American Express, had good earnings. And the one thing I wanted to ask you about this is, after we're done with this, could you do the dollar chart too? Because this is really a major thing with these.
Okay, so let's just do. Are you in Visa right now?
Yes, sir.
You still have your position. Good.
Yeah.
So I'm going to make almost the same recommendation that I just made to Greg, but yours has a variation. You have a position, and it's done very, very well. I've got this as leg D, but it's a very complex pattern. I've spent some time on it this weekend. I feel very comfortable with what I've notated. It can actually change to be something different, but right now, I've got it as an instant restart that just spiraled higher into another leg D. That's the daily. But I've got a D in the weekly. And the technique that I use of the 95% in the stochastic, which is very good, and the MACD still expanding, I like that. And the monthly chart is in leg D. So I've got 3 Ds. What I'm going to do, and there's a question in the den by Peak D. He said, can I use my Fibonacci expansion? I was going to actually do that on the weekly. I'll use it on the monthly, I think, to start off with. So here it is. you see, I look at this, there's a 300% expansion at 219 from the low that was made in 2009 in the monthly chart. When a stock goes above 261.8% expansion, that's when I say, okay, now it's in the coda phase, meaning for me, it's in a phase that says, this is the phase that should make some kind of a serious top, but don't be early. And in this case, I wasn't early. We haven't ever tried to short Visa. We've missed being long a couple of times, and it spiraled higher. Global payment solutions and credit debit cards. It's over 300%, which would have been 219. It's trading at 232 right now. The high today was 235.50. I'm going to make this suggestion, and you just think about it because you got into the trade perfectly. I'm not the one that did it. You did it, and I'm going to suggest that you think of taking a little bit off in this area right now. And what I'm doing, the reason why I'm saying that is that the extension that it's just had right now, at best, should have a little bit of a pullback to 229 to 227. If it takes out 227, it could give back this entire spike from late last week, from Friday, and it can go all the way back to 223. That's a lot of points just to give up, even though you're in a core position. But so I'm suggesting that you could take that off, thinking that you might want to put that same amount back at a lower price, but I'm also saying let's give it a few days, because this leg D, let me just look at and it's leg D, possibly peak D in the 120-minute chart. These are 4 Ds that we're looking at. If it was an E and an F, E in the weekly and an F in the monthly, I'd say, you got to take a lot more off. But I'm just going to say 232, you've got a good gain. Take something off. I wouldn't think of putting it back just yet. I'd give it 3 to 5 sessions. If it spirals up to 230, 237, I'll say, I'm sorry, but you'll be the one that's been making money because it's going higher. But I would prefer that you're locking in some of the gain that you've got, because the money management part says this kind of spiral up says be a little bit careful, and the way I'd be careful is to take something off. So that's number one. Number two is, in the monthly chart, depending on what happens for the rest of the week, if the monthly chart starts to take out 225, I'm going to be saying to myself, there's a problem here. We could be coming all the way down to 217 over a period of a couple of weeks, because it could be a peak D of some significance here. I would prefer that you go one step at a time, take a little bit off here, and then, depending on the speed, if tomorrow suddenly pulls back another 2 or 3 points, you might even want to take a little bit more off, keeping a core position. I don't want to change your core position. I think that you got in at a good point and you've had a very good gain, but you've got to consider that the extension that we had, while is very good in the weekly and the monthly charts, the rudder, which is the daily chart, says that if I give back too much of the gain of Friday, I could be giving back a lot more. If I hold really well between 230 and 229 and then bounce to 232 later in this week, that'll be very good action, because that's a high-level consolidation. So I'm just saying take a little bit off right now and then watch it very closely.
Okay, Basil. Well, thanks a lot for helping me out on this Visa stock. It's been really good, and you've had some really good stops, like that one. We had one at 217.90. Worked perfect because it just went to 18.30, and it just barely missed it.
Took off, and then it took off. Right. So let's see how this one works out. I'm a little bit more cautious now, so you can see that I wouldn't have recommended taking some off if I wasn't. So let's see how that goes, and congratulations on a very nice position play, Warren. Thanks
for calling. Basil. Could you look at the dollar maybe sometime?
Let's do that right now. Yeah, absolutely. No, let's do it right now. DXY is no one waiting. So I've got the dollar having made a low of significance at 79.69 the 27th of December. struggling to make that H pattern a very positive one because there was a rise in stochastic and MACD. There was a positive divergence between the D, trough D, on the 11th of December at 79.76. I am looking at the continuous contract, but it's usually no more than 20 cents or something between the two, the contract itself. So the numbers to me are good enough that I can use the continuous contract. 79.69 was along the 27th. Then what happens with this particular pattern? It says that if in fact there's going to be a new buy signal, it needs to climb very quickly above the 9-period moving average, which it did on the 2nd of January, screaming up to 80.71. And the very next day, it goes above the arch high of the 20th of December of 80.83. That's great action. So now it's gone to a leg B. It's given some of that back today. Why? Because we're in an area of the pattern that I love to call the H that goes to an M. So here we go. We've got this one here, and now we've got, this is giving it a broad sweep. We've got this one here. So unless the dollar takes out decisively, this is the continuous contract, 81.48, I've got to be a little bit careful here because it's got to hold. It's at 81.11. Let me just give you the DX. J, is it? JJJ is April. No, I'm going to go to the H. DXH. Actually, H is fine, but I haven't finished notating. So this is AB 43, parallel C. So, yeah. So 81.22 is the December, is the March contract. Sorry, the March contract. And now I'm going to go back to $DXY. Let me remember that. 81.20. Yeah, it's just 12 cents away. So I'm comfortable with this. So what I'm looking at here is that there's a little bit of a pullback. 80.95 is the 9-period moving average support. 80.80 is the next support. Major support at the, let me just check to see, this is 30. Yeah, 32. At the 32-period exponential moving average, major support at about 80.67. So we've got less than 40 cents. And you start to break, I shouldn't say major, important support. Pretty major support would be the low that was made at 80.44 on the 14th of January. So now let's just, so the daily says it's acting well, not so much today, but it has acted well by going to a new recovery high. The recovery high isn't high enough. If we look at the weekly chart where I've got the opposite pattern, which is a cup formation, that cup formation says still acting fine unless 80.44 breaks. And then I got to say, uh-oh, that H is going to an M pattern even in the weekly chart. I'm going to put this together, if you don't mind holding, Warren, I'm going to put this together with the gold so that we can see if there's still the relationship of gold going with rather than antithesis of the dollar. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. So here I'm looking at the XAU. XAU daily in leg E. Gold is down $15, $16. Did I finish up all those things? I don't think I even finished them. Gold is down 10 at 12.41. Silver's down 40 cents at 19.89. Platinum is down 20 at 14.48. High-grade copper is at 3.35, up 70. CLG, that's crude oil, is about unch at 94.60. Bonds are up 3.30 seconds, and as I said, dollar is down a little bit. And let's just go through this here. The XAU daily is in leg E, having just gone back to tackle the 94.36 high of the 15th of November, after going down to 14 points lower at 79.73. That's the XAU. The weekly chart is in leg B and quite strong. The HUI, that is the Goldbug index, is in leg E, not nearly as strong as the XAU, because that left side high of the 15th of November is at 232 and it's trading at 220 right now. Still leg B in the weekly. We've got GCG 14. Now, what I showed my subscribers this morning is one of the many techniques that I developed over the years. This one was like 7-8 years ago. I don't use this very much because I've got my own notation. But if you look at this chart right here that shows the gold, you'll see all these little green numbers. That's just tremendous resistance right there. And that's it. Gold should have a bit of a pullback, just a bit of a pullback, and that's the same thing in the 120-minute chart. So that's kind of how I use it. It's a fairly simple technique, I believe. It was a long time ago I put it together. I have to figure it out. So GCG 14 right now, this is leg C. Is it peak C? I think there was parallels high. 1262 was high. Yeah, so let me just sum this up. The dollar periodically goes, most of the time goes in counterpoint to gold. There are periods where it goes parallel. This is one of those periods where the dollar was going up, gold was going up. There's going to be a point where I think they diverge. That's later on, for just maybe another 4 weeks or so, maybe 6 weeks. And then I think the dollar has strength and gold starts to pull back much sharper. So, to answer your question, the dollar right now is holding in a high-level consolidation. If it breaks 80.40, let's call it 80.30. If it closes under 80.30, that's going to say, uh-oh, it's gone to the top of the range. Dollar could start to pull back, and that pullback says it could test the low 80s, maybe the high 79, 80s, somewhere around there. So in the meantime, there's nothing that I can say negative again about the dollar other than the 120-minute chart probably just made a little short-term top, and that there again 80.79. There's just a lot of support. So Warren, I'm going to say to you, the dollar's consolidating a little bit. Gold is pulling back together with the dollar, but the gold stocks are acting independent. So I'm actually on two wavelengths completely. Your question about the dollar and gold relationship, they're paralleling right now. They still continue to do the same, but the gold stocks, it's very important that gold stocks find their own footing, which they've done, and act very well. And thank goodness for my positions in the opening call. We've got some metal stocks that are doing very nicely. So, yeah, that's why I'm looking at it. So I hope that answers your question about the dollar. Dollar breaks out if it can get above 81.70. It's at 81.09 right now. What I mean by breaks out, it goes nicely above 81.50, starts to go above the high of the week of November the 8th. So it's not too much to ask, but we've seen even the Dow hasn't been able to break just those 100 points to start an upside move. So sometimes resistance can be strong. Thank you so much for calling.
Yeah, thanks for all that information, Basil. I really appreciate it.
Thank you for calling, Warren. Have a great day. Folks, stay tuned. You've got the options hour coming up. Usually, so it's always a fabulous show. And Tuesday today, and then, of course, all those other programs going on. My service is the opening call, and check it out front page of TFNN. I'll be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.